Hey everybody, thank you so much for checking the channel out today. My name is Agabus. This is your financial education channel. And today we're going to dive into crypto land to see a bit of an update on the FTX scandal that's taken place. For those of you who haven't been paying attention, there is a large lawsuit taking place in the crypto world around an exchange that went bankrupt a couple of years ago. We're going to dive into some of the information that you need to know about it before we give you an update. But as always, please make sure to hit the like button below if you like what you see. Subscribe if you want some more content that we put out. And drop a comment in the comment section below. Give me your true sense on this FTX scandal. Today we're going to be over at techtarget.com learning a bit about the FTX scam explained, everything that you need to know. The popularity of cryptocurrency exchange platform FTX rose rapidly after it was launched in only 2019. However, came crashing down with the crypto market in November of 2022. Cryptocurrency coins have quickly increased in value, such as Shiba Inu's coin, which increased in 2021 by 45 million%. Crazy. One way to get cryptocurrency is to open an account on a digital trading platform, such as FTX. You can think of a digital trading platform in the crypto space, like in the traditional space, say a Fidelity, a Vanguard, a Charles Schwab, some of those big trading companies. Until late of 2022, FTX was one of these trading platforms and was pretty large. Sam Bankman-Fried started it again in 2019. Customers began opening accounts in FTX to trade and buy in cryptocurrencies, and top venture capital investors started pouring in. Only a few years later, in January of 2022, the company was worth $32 billion. However, 2022 November, the whole thing came tumbling down. Now, we're going to make the distinction between FTX and FTT. FTX is one of the largest digital currency exchange platforms where you can buy and sell cryptocurrencies. As more people invested in cryptocurrencies, they turned to the platforms because they provided their own digital wallet to store the cryptocurrencies directly in personal accounts. After its inception, FTX quickly rose to dominate the market through high-profile acquisitions such as Liquid Global, LedgerX, and Blockfolio. They also use aggressive marketing campaigns such as Super Bowl ads, celebrity endorsements, and the naming rights to the Miami Heat's arena. The marketing campaign promised that people could put their money in these accounts and earn higher yields than the average bank. The average bank back in 2022 was not paying 5% like it is nowadays. Cryptocurrency boomed in early of 21, and the price of Bitcoin peaked in the 60s, up from 10,000. And customers began to take notice, and venture capital groups invested nearly $2 billion into the exchange platform. Now, again, FTX is the exchange, it's the company. FTT is a cryptocurrency. So cryptocurrency platforms often create their own tokens to attract new customers. As more people invest and the demand of the token goes up, it increases the value, so platforms may offer some of these perks. FTX created its own token called FTT in May of 2019. And then FTX, the platform, offered other perks for staking or for leaving FTT on their wallets. The downfall of FTX, the platform or the company. In late 2021, early 22, the price of Bitcoin started to decline drastically from its high in the beginning of 21, and other cryptocurrencies started to follow. Many major platforms started shutting down, except for FTX, which acquired competitors. However, the rise of FTX came to an end in November of 2022 when CoinDesk published an article stating that Alameda Research, also founded by Sam Bankman-Fried, was heavily dependent on FTX's digital token FTT, which had assets valued around $5 billion. Now, FTX, the trading platform, had a relationship with Alameda Research. Alameda Research is a hedge fund company. We'll dive into another article discussing the differences here, but the two of those were very well tied together. The balance sheet listed $9 billion in liabilities, but only had $900 million in assets, with poorly labeled entries showing a negative $8 billion balance. Alameda, the trading company, borrowed as much capital as it needed from FTX, the cryptocurrency trading platform, and it was later found that this funding was mostly from customer deposits, and the trading firm would borrow money routinely from FTX customer assets. So then criminal charges, of course, filed along as the cryptocurrency exchange started falling. Authorities arrested Sam Bankman-Fried on December 12th of 2022 with multiple fraud charges with FTX. He was indicted by the U.S. District Court on 8 criminal charges, including money laundering, wire fraud, and campaign finance violations and securities fraud. As of January 2023, $5 billion in assets have been recovered, but the total assets missing was estimated to be $8 billion. Just recently from yesterday, some updates from the trial. Now over to Yahoo Finance. Sam Bankman-Fried's ex-girlfriend said that he, Sam Bankman-Fried, directed me to steal billions from FTX. As we'll find out, the ex-girlfriend is Caroline Ellison, who was running the Alameda Research Company. Caroline Ellison was one of Sam Bankman-Fried's top deputies and his one-time romantic partner. She testified recently and said that Sam directed me to steal billions from customers from his cryptocurrency exchange, FTX. Ellison ran the day-to-day operations from Alameda Research, a crypto trading firm that was also controlled by Sam Bankman-Fried. She said Alameda took around $14 billion from FTX customers to repay debts that Alameda had accumulated. She also said they sent letters to their lenders from Sam, quote unquote, that made the balance sheet look much better than it was. The testimony from 29-year-old Ellison marked her first public comments about the FTX collapse that led to the arrest of the 31-year-old Sam Bankman-Fried. The prosecution is arguing that Sam Bankman-Fried embezzled billions in FTX customer funds while also defrauding investors and their lenders. Caroline Ellison, the star witness, corroborated earlier testimony from FTX and Alameda's co-founder, Gary Wang, who said Alameda had essentially unlimited access to FTX customer funds. Sam Bankman-Fried's team could try to pin some of the blame on Ellison as well. Sam's defense attorney argued last week that when Sam became concerned about crypto prices going down, he urged Ellison to put on a hedge, yet she didn't do it, according to the attorneys. According to the testimony, she continually avoided talking about risk management, dodging my suggestions until it was too late, according to Sam Bankman-Fried and the New York Times Post. A little bit of backstory regarding the two of them. They both met at first at a New York trading firm called Jane Street Capital, where she worked as a quantitative trader. After Sam co-founded Alameda, a hedge fund firm that specialized in quantitative crypto trading, he hired Ellison in 2018 and named her co-CEO in 2021 and sole CEO in 22. She was paid $200,000 a year in salary and 2 bonuses of $20 million and $100,000. She said she didn't particularly feel equipped to be the CEO, but Sam confirmed and said it made sense that there wasn't anybody else better for the job. Early on in the time at Alameda, Ellison said the company would take loans from third-party lenders, and by 2021 the amount was between 10 to 15 billion. These loans were open terms, which means if they were called back and due, they would have to be paid back immediately. And if Alameda did not have the money because their investments were low, this could cause a sort of run on the bank, so to speak. And finally, the article says, in fall of 21, Ellison began sharing analysis for worst case and bad case scenarios in the event Alameda's loans needed to be repaid, selling cryptocurrency, raising more capital, and adding more loans, all of which showed significant risk for Alameda. She was asked Tuesday to testify how she would repay the loans if they were called back, and she said, I assumed we would use customer funds. Crazy story that I am sure will become a Netflix original story at some point. But what are your thoughts on this FTX scandal, scam, Ponzi, whatever that is going on at the moment? drop your comments in the comment section below. And as always, thank you so much for checking the channel out. Hit the like button if you like what you see. Subscribe if you want to see more, and drop a comment in the comment section below. Thank you so much for watching. As always, stay informed, stay inquisitive, and stay subscribed for more. We will see you tomorrow.